Is the Coachella Valley real estate market cooling off, or are we seeing something more important happening beneath the surface? Last month's data raises a few questions buyers and sellers should not ignore. Are lower prices creating more real opportunity? Are buyers finally getting more breathing room? And are sellers still able to win in this market, or has the summer slowdown changed the rules? Because the answer is not as simple as good market or bad market. If you understand what's really happening, you may have a real advantage. So today we're looking at last month's numbers, and I'm going to break down what they actually mean if you're buying, selling, or just trying to figure out whether the market is taking a summer nap or setting up for opportunity. Let's get to it. Hey there, it's me, Stefan, the Bowtie agent. I create content to demystify the greater Palm Springs region real estate market while sharing the perks and the realities of the desert lifestyle. Because I love what I do, but more importantly, I believe real estate should be fun and easy. In this monthly market update, we are looking at last month's numbers so we can better understand where the market has been and what it may be telling us moving forward. And remember, national headlines are interesting, but real estate is hyperlocal. What is happening in Palm Springs may not be exactly the same as what's happening in La Quinta, Cathedral City, Rancho Mirage, Indio, or even Los Angeles or San Francisco. So let's get to it. Let's start with pricing. Across the Coachella Valley, single-family homes came in at $640,000, which is down 3.5% over last year. Condos came in at just above $405,000, which is down 10.8% over last year. So yes, prices are a bit softer, but softer does not automatically mean weak. This is where we have to be careful not to hit the drama button too quickly. And let's be honest, the internet loves a good drama button, right? Some cities are down while others are still showing strength. La Quinta, single-family homes were up 13.7%, and Coachella was up 5%. On the condo side, La Quinta was up 28.4%. Wow! Indian Wells was up 17.3%, and Cathedral City condos were slightly up. So, the real takeaway is this: the market is mixed. It depends on the city, the property type, the price point, the condition, and how well the home is positioned. Now, here is where the numbers get more interesting. The 3-month average unit sales were up 12.01%. Single-family sales were up 12.64%, and condo sales were up 10.49%. That tells us buyers have not disappeared. They may not be rushing in like they did during the pandemic years, but they are still here, and they're looking. They are still comparing. And when the right property shows up at the right price, they are still making offers. For sellers, this is important. The market is not dead. But buyers are not blindly chasing homes either. The strategy of pricing high and hoping someone falls in love with it is not the strongest play right now. Today's buyers are more informed, more patient, and more value-focused. Inventory is another key part of the story. Last month, inventory was at 3,400 homes, which is down 21.5%. So even though buyers are still having more options than they did during the tight pandemic market, supply has tightened up compared to the previous year. That matters. When inventory comes down and sales activity improves, that helps bring the market closer to balance. It does not mean prices are about to skyrocket, but it does show that supply and demand are still working together in a fairly healthy way. Buyers have options, but not unlimited options. Sellers have competition, but not overwhelming competition. That is why pricing, preparation, and presentation matter so much right now. Months of sales came in at 5.49 months, which is down 24.6% over last year. That tells us the market is moving closer to balance. Days on market came in at 73 days, which is up 2.8%. So homes are still taking a little longer to sell, but we are not seeing a panic. We are seeing a more normal pace. And honestly, after the roller coaster of the last few years, a little more normal is not a bad thing. For buyers, this means you may have more time to think, compare, and negotiate. For sellers, it means you need to be realistic from the get-go. The first few weeks on the market still matter the most. If a home is overpriced, underprepared, or poorly marketed, buyers notice. And they don't say anything, they just scroll past or exit the door immediately. Rude? Well, maybe. Reality? That's what's happening. Another important number, 27.5% of homes sold above list price, which is down 7.8% over last year. That tells us demand is still present. More than a quarter of homes selling above market is not a weak market signal, but the decline does show that buyers are not competing as aggressively as they were before. This is what I would call a selective market. Buyers will compete for the right property. They will not compete for just anything. Homes that are clean, well-priced, well-presented, and easy to understand are getting attention. Homes that feel overpriced or need too much work are sitting longer. That is the difference. If you're a buyer, this market may give you more breathing room. You may have more room to negotiate on price, repairs, credits, or terms. But the best homes are still getting attention. So the strategy is not to wait forever hoping for the perfect deal to fall from the sky wearing a bow tie. The strategy is to know your numbers, understand the neighborhood, and be ready when the right opportunity shows up. If you're a seller, this market is asking for honesty. Price matters. Condition matters. Marketing matters. And your first impression, which is online, really matters. Buyers are comparing your homes against everything else in your price range. If your home is positioned well, you can still get very strong activity. But if you're chasing yesterday's market, this market may humble you a little bit. Lovingly, of course. This is not about giving your home away. It's about positioning it correctly so buyers can see the value. So here's the big picture from all of last month's data. Prices are softer, but the market is not weak. Sales activity is improving. Inventory is down. The market is moving closer to balance, and demand is still there, but buyers are more selective and price sensitive. That is not a crash. That is a strategic market. And in a strategic market, the people who make the best decisions are the ones who understand the numbers and have a clear plan before they move. So if you're thinking about buying or selling in the Greater Palm Springs area, I'd love to continue the conversation. Just click the link in the description below to schedule a call with me. Now, do me a favor. Share this news with a friend or family member who may be looking to buy or sell in the Palm Springs region. And don't stop there. Check out my next video where I break down the 20 best things to do in Palm Springs. Till next time, bye. And let's be honest, the interest numbers, and I'm going to break down of 3,400 homes, which is down 20, last month inventory was. And when the night went, so even though buyers still have more options than they did during the very months of sales came in at 5.49%.